Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex weekly charts and analysis. It is May 10th, spring in many places. I guess not in all, but it's definitely spring weather here. It was cold, rainy all weekend, super cold and rainy, and now we're back up to 60. So it's that Mother Nature playing games with us, telling us it's spring, telling us it's summer, and then reminding us that winter is, just 2 weeks ago. Um, so it's amazing. May 10th already. I literally feel like we were just having this discussion about April, and now we're already rolling through May. And there's some interesting news today. Not necessarily economic release based news, but there was actually some headlines. Yellen was speaking, kind of giving us some stuff, and then a very pointed comment, and not from her, right, from Mester, and all everything switched. We talked about earlier today, and on YouTube, we were talking about today was the day of reversals. We meant a reversal from yesterday, but as it turns out, right when we said that, everything reversed yet again. So it was a reversal of a reversal type day. Again, some craziness in the market. So we'll see what we can what we can find for today. Um, Hit the button. There we go. I was like, why is it not working today? For those of you that are new here, welcome. If this is your first time out, as I mentioned before, I'm the president and CEO of Keep Trading Simple. I'm not a Nadex employee. I've just partnered with Nadex, and I've been with them now for, I think a Facebook post that I made. I found it the other day, like 5 years ago. I was talking about an article that I written for Nadex. So it's been 5 years now that I've been doing things with Nadex. It's crazy. It doesn't feel like that long, but at the same time, it feels like I've been here for a while. But anyway, I run a small company teaching people how to trade the markets. I am a price action trader. I'm a big believer in supply and demand. I will use other tools as confirmation. You'll see me occasionally throw fibs on charts. I use them as a confirmation tool only, not as an entry. I do like using them though because a lot of people out there use them as entry devices. So it's nice to kind of know where the masses are trying to put orders at. I've written a number of different strategies. I love looking at strategies, pulling things apart. I guess I'm somewhat of I don't know, kind of have like an engineering mentality with that one. I love looking at strategies and kind of figuring out where they're going to work, not work, and how you adjust them and make them better. Um, I was actually on the inside of the industry. I started back in 1999. I'm a Y2K trader. I did it for a number of years. I learned stocks, traditional options, found currencies, fell in love with it. I did become a financial advisor for one of the big three advisory banks. I can say that I worked on Wall Street. I didn't actually work on a trading floor, though. I was not a floor trader. I actually had the opportunity to teach some people that had been floor traders, and they asked me to teach them how to trade the market, which I thought was interesting. Lived 2 blocks from the New York Stock Exchange. I literally walked past the New York Stock Exchange every morning for about 2 years. I actually out right outside my window, I could literally look out my window and see the bull. You guys know, the bull in Wall Street. I actually had a friend up there the other day that posted a picture. I took a picture with it. I was like, "Yep, used to see that every single day." And it is true what they say. If you've never been to New York, the pizza is amazing, and bagels. They just do bagels like nobody else in the world. Um, it is what it is. When you go there, it's just unbelievable how good their bagels taste. Um, but yeah, living in the financial district was definitely an interesting experience. Being on the inside of the market, working for an advisory firm, learning about a lot of things that people on the outside never hear about. Awesome experience, but I realized that my passion was really teaching people how to do it themselves. Inside of that realm, when you work there, you're kind of shackled, you're kind of handcuffed, and I didn't like that type of restriction. That's why I left that industry. Unfortunately, I say unfortunately, but not unfortunately, I am still handcuffed a little bit. My wife does work for an advisory firm now, so I am kind of still limited on what I can do. But at least I can teach people how to do, things in the market that they may not have known before. So every one of these presentations, I'm hoping you guys get some type of golden nugget or some new outlook on some type of trade, something trading wise. That's really why I do what I do and why I love it. So this picture is so outdated at this point. From the morning shows, you guys know that I have a beard since COVID. So like I have a beard now. The boy on the left here, the little one with the short hair, he's almost as tall as Melissa, my wife. He's got hair down past his shoulder. The other one has the short hair now. That girl now has hair down past her butt, and she is big. And we have another baby that's about that same size, little boy. And you guys have, if you've been here, you've heard Kip once or twice. But yeah, he just went down for a nap for the first time today, so hopefully we don't hear him. But mom's got him right now, so I got an hour off. So let's dive into some charts. Before we begin looking at charts, though, we do have to cover a Nadex risk disclaimer. You guys have heard this before. That trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost at another transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. Now, past performance is not necessarily indicative of future results. None of the material presented here is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of Crypto.com. Each week, as things start to progress, it's a brand new relationship. Obviously, they've just recently become owners of Nadex. As we hear, obviously more, and the relationship continues to grow. I'm sure we'll have a lot of exciting announcements. Nothing yet, but there's awesome things coming. I obviously don't know anything, but I just know that they were really, really excited in the merger. And again, we haven't quite heard the new. I mean, whenever you get a new toy, you got to drive it around the block, right? So we'll probably start hearing stuff pretty soon. All right. With that said, here's the agenda for today. First things first, we are going to cover the upcoming news events. Now, when we started today, I mentioned that there was some headlines today, and it's kind of news. There was headlines. I'm going to say headlines. Um, there was headlines today, but not necessarily anything that I would consider kind of like earth shattering. Some comments are great, but again, at the end of the day, they are just comments. They're not law yet, right? For lack of a better word, right? So they are good. It definitely was surprising for the market. It could be why the market did the turnaround that it did. There's a couple different factors in there that could have, added to it. But for the most part, I think this is one of the ones that people are really kind of like, wait a second, I thought I knew what was going on. Maybe I don't. The market was moving in one direction. It was like, all right, we got this. And now it's like, oh, wait a second, that didn't expect anybody to say that. What's going on now? Right. So now there's questions coming back up again, and the market doesn't like questions. Okay. Then we'll break into the actual indices, right? We're going to look at really what's happening. And again, there's a lot of whipsaw back and forth. We'll see where some additional opportunities are later in the week. We'll look at forex, and again, a lot of stuff going on forex right now. An example being, pound yen was down 160 something pips when we were on this morning at 8:45, and the last I checked a little while ago was down like 40. So obviously a lot of movement, in a short succession worth of time. A lot of whipsaws. So again, it's a very different type of market right now than what a lot of people are used to. After that, obviously currencies. Then I'm sorry, commodities. Commodities basically meaning gold, silver. Again, they are playing reversal day. They must have, gold and silver must have listened to our broadcast this morning because they have definitely reversed. They were green, then they were red. And again, we keep mentioning every time gold goes up, it's a great time to sell more. And then again, natural gas, right? Natural gas is huge movement today, and that's really natural gas has become the Wild West, for lack of a better word. There's just been so much movement and volatility. This morning it was down big, and then the last I looked at, I was like, "Well, look at that! Look at that rally!" Just amazing movement inside of natural gas, and we'll look where that goes for the rest of the week. I think there's a lot of headlines coming out. OPEC has made some very, very important, not necessarily pointed comments, but very important comments. Again, they are a large institution. They are not necessarily U.S. friendly, and because of that, the prices of oil has just been all over the place. Oil is actually down right now, and it's an interesting reaction to the comments, but at the same time, the comments are not new; they're just kind of reaffirming it. But they also had the single comment in there about how we like oil above $100. So I mean, if they want to make it over $100, that's on them, not us. And the market was like, oh, okay, so there won't be a supply shortage. So again, getting a little bit of reaffirmation of the actual supply dynamic of oil. So yeah, so that's it. So let's go into the charts. Where is it? I got to find the right window here. So right now, again, things are kind of bouncing back and forth. It looks like President Biden is delivering marks on the economy. Hold on, what is he saying here? The pop up. Delivering marks on his plan to fight inflation and lower costs for working families, and contrast his approach with something else. So now I'm curious. Yeah, with congressional Republicans. So yeah. Unfortunately, it's inflation is my top domestic priority, which is kind of interesting because they've done nothing, and the guy that he put in power is still continuing to do nothing. So yeah, a lot of talk. We need to see the action on that side, and we're not seeing it yet. But anyway, The headline I was talking about earlier was Mester's comment. As you heard, again, Powell is. I'm not the biggest fan of Powell. If you are a big fan of Powell, then I apologize. You're probably not going to like me. I think he has been completely ineffectual. I feel like again, we've gotten a million lies at this point. I mean, we were making fun of transitory inflation. What 2 years ago now? Oh, inflation's transitory. It's transitory, and now we're sitting at 40-year high inflation, and Powell is talking about how 50 basis points, 75 is definitely out. Messer's jumping in and saying, "Hey, listen, we don't rule out a 75 basis point increases forever." Um, again, this was something that kind of seemed like it was like, "Hey, that's it, it's never happening." Now we have one of them speaking and actually mentioning one of the Fed presidents saying it's not forever, right? It's definitely something that should it be warranted, we could put one on the table, right? Not it's not our current belief, but we could put one on the table. That is a big switch from what Powell is saying, and that would be the second Fed president now that has said it. And again, Bullard was calling for 75 before. If you remember, Bullard was calling for 50 the first time, and everybody else was like, "No, no, I think 0.25 is good. We don't need 50." And then all of a sudden, everybody was in the hey, we gotta front load this. We gotta make it big because this is getting out of control. Remember, when you're paying double for groceries, that's called inflation. Paying $2 more for gas, that's also inflation. And again, so it's interesting that we're now mentioning it's the number one priority. But yes, that is big news that we won't rule out 75 basis points. That is a kind of a big boom, right? Like I said, it's great that we have two in there. Dollar yields off a little bit. Again, commodity sync. This is that reversal we were talking about. Yellen was speaking this morning. Remember Yellen? And again, you can see that it's a yellow color. Um, Yellen, the position that she holds used to be an extremely important position. Um, at this point, it's basically gone from like a red, right? A red to now it's like whatever. It's not necessarily market moving. Her comments again: Russia's clearly in a recession. Inflation is probably 20%. Great. Russia's an export nation. They require for them to function. They require people to buy things from them. They want themselves to be, they want their currency weakened. It's not bad. They're trying to do kind of what Japan is doing. So, you know, great. They're in a recession. Lovely. Our inflation's also out of control. So focus on us, not Russia. You know, I don't like paying double for everything. But again, that's what we have as far as today. It's just speeches. Waller is speaking, as well as again, we've already got Messer's comments. Tomorrow morning we have Lagarde speaking for the ECB, and again, we've talked about a lot of mention of the ECB actually raising interest rates, probably in July. They've tried to use the Ukraine. We can't do it because of the Ukraine. Unfortunately, their inflation is getting out of control. Germany has now had an economic consumer confidence number that is, they've had bad ones. The UK's had bad ones. So, kind of the using the Ukraine as the excuse of why we can't raise interest rates. Inflation is getting out of control in almost pretty much every country in the world. And yeah, they're like, well, we got to do something. Maybe we're not going to raise it as much as we could have, but we got to raise it. And that's what we're going to see. And supposedly July is the magic number. So, could be an important speech. Then tomorrow we have CPI. Okay, CPI and core. Now, this is an interesting reading tomorrow. It is supposed to be going down, except there's one kind of caveat to this. Last time when we got these readings, right? They talked about the forecast and they were really not highlighting CPI in itself, but they were highlighting the core number, about how the core number came down. And Bernard, again, picked as the kind of number two to succeed Powell, and she was going to continue his policies. She was patting the Fed on the back for taking great action, and look at that. The core is coming down. Now the core is forecast to be going up. So, yeah. It's one of those things, did you pat yourself on the back too soon? Maybe. Core is kind of, again, this is removing, and in reality, CPI is really what matters the most. Both of these are still positive numbers. We're already at kind of 40-year highs. Unless these are negative, the situation is still continuing to get worse. So is it great it's not still continuing to go 1.2%? Yeah. But it's not like it's dropping back, 0.8 or something like that, or 0.5, meaning that this one went lower. It's still continuing to climb. The fact that the core is, though, accelerating back again also shows that their 0.25 was completely ineffective. Now we're starting to get the 0.5s in there, and we'll see what that's going to do as well. So that's there. We do have New Zealand inflation expectation. Look at that. On a quarterly basis, up 3.27%. Again, it's a problem everywhere, not just here, right? Uh, Thursday, we have preliminary GDP on a quarterly basis. Remember the GDP, remember the UK has, they've done 4 interest rate rises already. So they're 4 into it already, and we're seeing inflation go higher. The GDP is good that it is high. We did get some data earlier today that UK shoppers now, they got this reading that UK shoppers have started to pull back. The cost of living, and again, this is an amazing quote. The rising cost of living has crushed consumer confidence and put the brakes on consumer spending. That's the environment that we're starting to enter in. Thus far, the retail sales numbers in the United States have done well. They said, "Hey, listen, yeah, our inflation's out of control, but the public is still spending money." There will become a point eventually that won't happen. There was there was a very informative gentleman on this morning while I was dropping the kids off. On CNBC talking about how they keep blaming the labor market. It's we can't do this. The labor market is so tight. And what they said is there's some important numbers to look out for. There's 11 million job openings right now that companies are trying to hire people for, and there's 5 million people or 6 million people. I think it's 6 million people are looking for jobs. There's a $5 million difference, or a 5 million, you know, person difference in between those. And they said that's the important number to look for. Right now, companies haven't started to pull back. When the economy starts to get to a point where companies are worried, that 11 million should definitely start dropping down because companies are going to start going down. Right now, they consider it a positive environment still. Rising interest rates hasn't affected them in the slightest bit, meaning we haven't done enough yet. Okay, meaning we haven't done enough. Okay, they said there will be a natural reduction in job openings when the economy has finally gotten to a point where inflation is going to be a little bit more controlled. And right now, it's still runaway time. So he said that's the number to watch out for. Don't listen to the talking heads. They said that 11 million will get closer to the 5 or 6 million. That's what the real that's the true reading. I was like, that's genius. I've never heard that before. I was like, but it makes complete sense when you think about it. Again, they'd love to hire people because it's an expansionary type form. We'll also get PPI, which again is another one of the inflation readings. PPI has been kind of, for the most part, they haven't been really, really good. They were supposed to come in at 1.1. Guess what? It came in much, much higher than expected. So if you see this 0.5, like, look at that, it's going lower. Well, I mean, last time they missed this by 0.3. So add this back up again to take the difference here, meaning to this one's higher on the trajectory. It's 0.8. It's kind of on par with what we're seeing. It's not really changing too much. It's just there was such a big miss last time. It typically lowers the next one. Okay, so we'll see what PPI looks like. We'll get the core number as well. And I believe the core number is supposed to be, again, last time it was supposed to be 0.5. And remember, that's what Bernard was saying. Oh, the core CPI, right? It went down. It was huge over here, a huge miss to the upside for the core. So we're seeing it everywhere. And then we get the unemployment claims. Again, the unemployment claims is so low. It's under 200,000. It's just not, it's kind of laughable how low the number is. And again, just it's because so many people are looking for jobs right now because the environment is just so good. You know, it's just so good. There's no risk for them. All right. Then we go into Friday. Friday, not a whole lot. We see, the preliminary University of Michigan consumer sentiment, and this is kind of what we're talking about with the UK, right? Seeing confidence down. You can see right here inside of the same article about putting the brakes on. It says this retail sales monitor, right, revealed that sales dipped in April after a sharp downturn in consumer confidence. Looking at the projected news, we're starting to get lower and lower and lower. And again, it came in much, much higher than expected. They're already forecasting that consumer confidence is going to drop, right? So it is high. They're saying it's going to maintain high. I feel like this forecast may be a little bit over. I think we should get prepared for a red number this week as far as consumer confidence goes. Like I said, the more and more goods cost things, the confidence in the economy starts to dwindle. Right now, again, I have babies. My Kip is not a formula baby; he is a breastfed baby. But I don't know if you guys know that there is a formula shortage right now. Again, there was a recall, but there is a formula shortage right now in the United States. There are millions of children out there. I mean, there was yesterday they were talking about don't water formula down the ones you have. Only buy 3 cans if you can find it. If you see cans, if your child is on like the special formulas because you have allergies, they're like make sure call these hotline numbers to get special access to them. we're running out of formula. We can't even feed babies right now because of the recall, and they have not started to produce more yet. So these are the things that start leading to negative consumer sentiment. And again, we've known that a food shortage could actually be a real thing this year. So this could start getting eaten up, and once this start gets eaten up, this is what we have. People putting the brakes on, and again, we can see some major reductions in overall, economic movement. So, and then again, Messer speaking again. Let's see, Messer speaking. Talking about monetary policy after the pandemic at an online event hosted by European Bank. Eh, it may be a headline for a Friday afternoon. Um, not a horrible one. There are worse ones, right? But I think that could be a good one, particularly because again, Messer is the one that just mentioned the 7.5 basis point hike. So, um, yeah, we'll see. So, as far as events go this week, there are some pretty nice ones out there. Two of them are big gauges of inflation. Inflation is the hot button. I mean, Yellen is talking about it. Biden is now talking about how it's his top domestic priority. COVID doesn't matter anymore, I guess. Even though, again, the numbers we're seeing for COVID, there's many cities that actually technically should be mask mandated again. We're starting to see a resurgence in many places, but now it's inflation. And again, it's probably I most likely, it's because we're getting closer and closer to October, and that's going to be the hot button. There is going to be inflation and what's been done or what hasn't been done yet. So, yeah, just kind of keep it. And again, anytime we see anything on the Fed, any articles on the war on inflation are always going to be a good thing. And here, by the way, I forgot to link it. Here's that article talking about ECB's Nagel backs first interest rate hike in July. So, and everybody says the same thing. It doesn't matter who it is. The data confirms that inflation is just too high, right? Everybody's talking about it, and the risks of acting too late is increasingly notable. This is important to note as well. Again, this is the ECB's Nagel. The United States has been like, yeah, we got to be prudent and do it. We got to act fast. It's starting to be acknowledged that acting too late is getting, the risk level is getting so high. And again, we're barely doing anything in the United States with it. So, the impact of Russian aggression on inflation, prospects the monetary policy response. Yeah. And again, this is the big thing. This is the big impact that nobody knows. So, yeah. So that's the news for the week. As far as kind of going over into the headlines, first things first, we got to start with the VIX. So this is a 30-minute chart of the VIX. We're seeing the VIX kind of bounce back and forth. Again, as kind of expected. The VIX always goes up in the U.S. session when more trading volume is actually happening. It was from yesterday. It was kind of at a high, and we kind of saw it kind of drop down in the European session, and then kind of took back off. Excuse me. Now, this is not a supply and demand driven tool. You're seeing it a bit higher up here. It's probably going to pull back. It's lunchtime. All the news is out for the day. Unless there's any major headlines, this is one of those ones that I would assume that we kind of get a little bit of a decline. And then maybe we talk about it at the end of the day and we got a pop. But for the most part, the VIX right now is kind of giving us a mixed signal because it was going down, 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 one spike, and now it's pulling back. And again, whenever it spikes up in red or in green, you tend to see, again, and this is a weird one. It is showing negative, but you're seeing all this red here. Yes, it is lower than what it was, but it's done nothing but go up since the U.S. session started. So, again, little bit, you got to kind of dive into it like another level to understand exactly what it's doing. Now, the dollar is the other aspect of the overall markets that we need to look at. As you can see, the dollar's kind of found a bottom and more or less stabilized itself. It almost came back up and touched 104. 104 is a big number, right? Typically, and I'd say historically, we tend to see the dollar in the mid 90s, right? Again, the dollar, internationally did lose a lot of strength, and but you see, if it would get up to like 98, it was considered strong. We've just started raising interest rates, and the dollar is very high. Again, being a big country, if you look at every nation in the world right now, inflation is a major deal, right? And if you look at why inflation is existing, one of them is because obviously, the Russian aggression in the Ukraine. The U.S. exposure to it is basically slim to none, right? We took in 90,000 barrels a day. It's a drop in a hat. It really wasn't a huge deal for us whatsoever. COVID was a big deal, but obviously we are kind of on the other side of, the worst part of COVID as far as what we've experienced. Who knows what's coming next? The dollar probably has more room to run. So 104 could be the new baseline that we're looking at. Right now, it's kind of, again, tempering out again. CPI for tomorrow, we probably will have some movement in the dollar. And again, the easiest way to play this is probably going to be over in the currency market, but the indices will move a bit, right? Obviously, rising interest rate environment. There's a lot of fear of what could happen and how high it could go, and what is it going to mean for lending. And again, it could obviously raise the fear index, right? VIX going up, and again, dollar strength because if data is if CPI is high, the only weapon they have, right? The only weapon they have is again rising interest rates. So yeah, could be a big issue. Now let's look at the ES. Let's drop it down to a lower time frame. We'll kind of make some adjustments. Had you attended our morning session today? Which, if you're not sure what the morning session is, um, Todd and I from Nadex, we do a morning show every day on YouTube. It is on Nadex's YouTube, so it's very easy to find. You can just go to YouTube, search Nadex, find the profile, hit follow, and then click the notification icon. And whenever we go live in the morning, you'll get you'll get a pop up on your desktop. We talked about this being at again we were talking about profit targets at 39.65. We ended up hitting it late last night. We talked about it rallying back up again, and this morning we were sitting right around here, right? We just peaked over the 23.6, and I said, listen, the 23.6 is one of those levels that a lot of fib traders will look for trend continuation with. Everybody knows you're supposed to buy on pullbacks, right? Right? You don't buy it at the top or the bottom, or sell it at the bottom, right? You wait for it to pull back. You try to get it on sale, right? Get it cheap, right? There's no reason why you should buy it at the most expensive price it ever was. You always want to wait for something to be on sale. Well, this is a common kind of pullback level. If you guys are unfamiliar with it, is this 23.6 percentage level. It was pulling up to there, and we had mentioned before, and we already had one trade come through it. We had an area of demand, or I'm sorry, supply sitting there where sellers had shown us that they had stepped in. So at 9:30 this morning, okay, we talk about, and again, you'll hear me talk about it a lot, my 15-minute kind of opening trade strategy. This is a perfect example, right? We're pulling back into an area of confirmed supply at the session open at the 23.6 level, acting as a confirmation. And boom. The 1 to 3, it's obviously the same level. You can see the 1 to 3 was here. This one went all the way down, and magically, where did it stop? Right at that 93.65. So I think this is an important level. Again, we've had buyers in the past. They are confirmed. It is slowing down right now. We are running into them. It is lunchtime, obviously, at 12:30 in New York. There's not a whole lot of volume behind it. It really dries up during this time frame. So I think, again, I think when New York traders come back in the next 30 minutes, I think this probably has some power to kind of start moving, right? Um, and that tends to be what we see, right? When the volume comes back into the market, you tend to see a lot more movement from it. So I think there's some potential in this one. Am I willing to go long this one? you know, it's kind of a hard time and a hard time to make that decision. One, I love the comments that Mester made, right? I love the fact that they're like, no, 75 has to be on the table. We cannot automatically rule something out. We don't have the data. And I love that data side of things. Obviously in here, I don't see any of the headlines yet. Um, besides, let's see if there's anything in here. Taking inflation very serious. You're taking it very seriously. Okay. Um, Priority the causes of the pandemic, the supply challenges, the Russian war in Ukraine. Yeah, I mean, most of it was the pandemic because Russia just started this year. We already were at almost record highs before the Russian war on Ukraine. So it's nice to lump that in there, and that's probably why it's continuing a little bit longer. But the pandemic was the biggest piece of it, right? Locking down ports, supply. We were just getting supply back again, right? And then China went to lockdown again, which we haven't really heard from. Biden says the Fed plays the primary role in fighting inflation. Yeah, it does. Uh, he's 100% true. It should be their call, but unfortunately, there's so much political influence now in the Fed. I don't know if we'll ever actually get a true kind of role of this one. Yeah, it's kind of hard. Look at this historic inflation occurring all over the world, which he's absolutely right on this one. I mean, this is a fact. We are seeing historic highs everywhere in the world, and everybody's raising interest rates. And again, we're kind of doing it slower, and then we had some statements earlier this week that kind of like what? Um, Boosting global supply will cut gasoline prices. Yes, he's not wrong, but there's no additional global supply out there. So it's a nice comment, and yes, he is correct. This is Econ 101, boosting any type of supply. When you increase, and again, this is why I'm a price action trader. I believe in supply and demand. Boosting supply across the board will always lower prices, right? When you have too much supply, the demand becomes lower. When there's lower demand, there's lower price. So he's absolutely correct. Every oil organization in the world said it is impossible to replace Russia. I guess my question would be, why are we still focusing on gasoline when we have alternative technologies that we could be putting billions of dollars in and fostering those? Okay. Um, yeah, that would be my big question here. We're not talking about lowering the need for gasoline. We're just talking about sending it somewhere else. And that's kind of where this becomes a political issue, that this is purely, trying to put the blame on somebody else when, yeah, the United States went from an oil exporter to an oil importer because of Mr. Biden. So, yeah, that's an interesting one. Like I said, no major headlines, but there's still time for more headlines. That's why I'm very hesitant in saying just take it long right now. And again, the market doesn't seem like it's super enthused with what he's saying thus far. But always want to be careful with it. It only takes one headline. Again, the president is one of those people that can make a huge headline that can suddenly move the market. War, a president, the Fed, a Fed chief, or like the lead central bank person. They all have the ability. Warren Buffett says something. You know what? Everybody should sell the market. The economy is done, right? So there are certain people. So I would say that there's an increased risk right now. Basing things on a purely technical basis, this is a level. It was a target. We were looking for it to hit. It has it. It hit it again, and now it's coming through. At this point, you got to be saying, "Hey, wait a second. This is a Harry Potter thing. I know this, right? I know this." And you're right. Yeah. Whenever we have a level that we use as a target and it's hit it again and it starts to base in there again, it suddenly becomes now an entry and a defined risk level for us to go again short again. Um, this one's not bad. It's basically taking it down to 39.26. This would be turn it black as a target. Again, we could see a little bit of basing and pullback. Like I said, that 0.75 is a big shock. A lot of people didn't think they would actually do that, even though the market overall wanted to. And again, maybe now that the president is saying, "Hey, this should be actually a priority, guys. We're losing votes," you know. Um, yeah, I mean, it's like I said, he's not wrong. It absolutely 100% should be his primary focus right now, um, because it is out of control completely. So, I'm glad he made the comment. I just don't feel that he's going to do much with it with Powell right now. So we'll see. But anyway, I would say the 23.26, or I'm sorry, 39.26 is probably the target. As far as big levels we can turn at this week, honestly, for me this week, I would be very hesitant to really try to find great longs. I would really more be looking for pullbacks in the market, and here's why. Right, everybody across the board, even Biden, right? Everybody's acknowledging that inflation is just way too high. That we have to be prudent about it, but we need to raise interest rates. Again, consumer confidence will go down. There's not really much out there. I mean, we've cut, the government balance sheet has been cut. There's not too many fundamental factors for another market rally. At this point, it's kind of like we've almost moved into the mode where everybody is just looking for a reason. Anything negative for the market has like a 2 times multiplier to the downside. Anything positive for the market, it's got like a 1 times multiplier up. So overall, right now, I feel like down is probably a better option. When we get price pullbacks, look for it to pull back to this again. This is a defined level. We had talked about it before. It was the bottom, and again that Harry Potter trade. It was right here, right? We hit it, we hit it, we hit it. We based in it. Oh yeah, we break, we base, we pull back, and then boom, we collapsed out of it. We're kind of doing the same thing now. I think whenever we get good opportunities this week, this is one not too bad to go to the downside. And remember, even if CPI is off the board, even if it's a total miss, there's still some great opportunity in there, particularly with some of these Nadex contracts. Now NQ, it looks very, very similar. Now NQ, we talked about it coming off a level, and it's awesome. It's hitting that level again. Love it. I'm glad that it did. We mentioned earlier today, and again, 9 o'clock is actually this one right here, this green one. I mentioned it. There's not really a great level for it. As if it could have pulled back a little bit more, I was in. Unfortunately, that's what it did. Is it found the sellers right here that helped put this top in, and that's what it ran into. So we mentioned it. I like the ES setup better, and again, the ES was a better setup. It literally came up and touched it and gave you 2 options to get in. It did the same thing here, and again, we're bouncing off this lower time frame level. At this point, I'm looking at this and saying, well, wait a second. Here's that kind of base. We know this is a level from prior back. We talked about, 12,208. Question is now, and I'm going to change this to dark blue color. Question is now, are we looking at Harry Potter this sucker? And maybe, right? It's still on the top side. Again, 1, 2, it breached it, came through. Do we look for a break of this one coming through and breaking through? Actually, let's put this down here. Do we look for a break of 12,102? Right? Is that where we're looking through with a pullback? And maybe. Remember, for those of you that don't know, I am very much an if this then that trader. I actually have a newer student of mine. I guess she's not. She's a newer student of mine. She's been a follower for a while. She's like, well, how do you decide if you're going to go long or short? And the answer is I don't. I'm not one of those people that looks like it's like, oh, I should, it's going to go here. It's going to do this. For me, it's more if it does this, then I'm going to do that. In a lot of cases, and that's kind of the scenario of what we got right now. I don't know when it's going to break 12,102, but when it does, if it does this, where is it? It was the other trade. If it does this, I'm looking to get short. I don't know if or when it will, but if it does, then I'm looking to go short. Now, YM is also another one. YM, we also talked about it. We were sitting right here. I mentioned, I said, listen, there are sellers in here. There's a big area here. There's a little gap on top of it. If you wanted to draw a zone, you could say, hey, here's where the gap occurred, right? You could say, look, there's the bottom of the red candle from the gap, right? That's how I draw things. That's exactly what it ran into. Okay, it's not a coincidence. The black line was right here. We said this is where they're going to come in at, and it hit it at 9:30 right at the open. So it would have been another one short right off. Europeans sent it up for the U.S. trader, and boom, right back down again. We even talked about how there was a Globex high right here at 5:30 that if it went through, we'd be looking to short because it would be a trap. It went all the way through, and again, you can see when we had the other opposite in the spectrum, again, it bounced right off this 32,000. Yesterday, again, we nailed this dead on. Now we're looking for the same thing, any type of a pullback. Unfortunately, this one's pretty wicky. We may not get the same pullback. Let me see if I can see. Just trying to see if I could go far enough back without going like to much, much higher time frames. Let's go to an hour. Yeah, I can see it. All right, let's see. Just trying to see where the next kind of level where I'd really be looking. We know that these two are broken now. Again, these were two kind of targets that we're looking for. Pull those off. It's running into this right now. That's exactly what it's running into. We do looks like have another level down here. And then let's see. Ooh. Not that I love that one, but here, I'll just take one of these. Could be another area right there. I'd say that these are the next two levels of decent reversals. So, yeah. And again, this is on an hour, so we typically do this on a 15-minute, so it's going to look like it's a little far away. So, yeah, I'd say that there's our next two levels as far as the YM goes. Looks like 31,770 would be one, and then the next level across. And again, I'd like to see some type of a confirmation entry. If you're new here, what I mean by confirmation entry is not just taking a pure, just kind of single touch of it. I'd like to see kind of bounce and then kind of see what the price action looks like. I'd like it to hit once and then kind of come back to confirm that, yep, we put new buyers in, right? Um, Again, I don't love these to the south, right? Or bearish direction. I do. I'm sorry. I do love them down. I don't like any of these necessarily for longs to the top side. I just think with what the environment that we're in. Remember, the economy is not the stock market. They could technically crash the stock market, and that's not the economy. But again, I'm looking for more reasons. Again, this 32 is blown up. We're gonna leave it there just for a Harry Potter, but this is kind of what I'm curious now. Where will fib? Yeah, they're right there. Look at that. The fib traders are stuck right around that same old level. 23.6 is probably going to be where they look to step in if it rallies at all this afternoon. Okay. Um, so again, just keep that on your radar. But I think these are the next two levels I think we hit. And again, if you wanted to take these for downside profit targets, you could absolutely do that. The 31,769 and 31,423. Russell also nailed this one to the top. We were sitting right here is where we're for Nadex, and I mentioned, hey, listen, 71.95. If it came up much higher, it did. It hit it right at 9:30. We literally spiked up, grabbed my level, and it went down. It's funny. I joke with my students that Uncle Warren is watching, right? Like, how did you know it was going to turn here? Well, I had a confirmation of it turning before, and again, we did this right here at 9 o'clock. That Uncle Warren was watching, and that's what popped us up and led us to a short. And again, we talked about if it did short, the target would be 1761. You can see it. It skyrocketed. It blew right through. It didn't even pause. It did actually give us a little bit of a kickback. And again, I didn't adjust this level. I should have adjusted this down. We don't do as much on the Russell. There's the basing at the bottom. I can take the green box and actually put it down there. That's where the bottom base was. You can see it kind of did the pause and the pullback and then continue down. So not the ideal Harry Potter entry. We'd like to see kind of the base not necessarily touch. But again, drop base, it pulled back, grabbed that zone again that it just broke, and then right to the races down. So yeah, it's there. But yeah, the targets are hit on both sides of this one, so we'll have to start readjusting it for tomorrow. But yeah, so if you like things like this, definitely come to our morning session. We've been hitting this a lot lately. Going across the currencies. So currencies I will go through a little bit faster. This one is just, we've been looking for pullbacks, trying to figure out how to get short. I got to change it to a 30-minute. I look at the 15-minute for indices. If I look at a currency chart on 15, I'm like, oh my God, why is there so many candles? Like, I can't look at this. It's just too much. It's like too much stimulation. Um, gotta go to 30s. Um, so we talked about this pushing down, and as you can see, actually Monday morning we talked about 69.75 being a long area. You can see it touched, and then it spiked higher, and then came back down again. It did that same Harry Potter. It dropped at base, it pulled back, and used that same zone to here, and then went short into another level, which is what these two green lines are, and then pulled back up, and they're using the same level now. So it's kind of basing. Again, I'll remove this level now. I don't necessarily need it. Let's pull these off so we don't confuse people with what's coming next. So we're technically in a zone. That's what we've bounced off of. I will say, yeah, it was 9:30, 10 o'clock right there. That was a good one. I missed this one. Yep. Always transparent when I miss something, and I missed that one. Mhm. So this was a zone that was formed at about 2 o'clock in the morning, right? It was confirmed here at 5:30. If you don't know, 5:30 in the morning is basically I don't want to say universal, because it's not really universal. But 5:30 in the morning tends to be when we see European reversals come into the market. They have their initial push at around 3 o'clock. It's when the majority of their volume really kind of steps into the market, and then they have their reversal. Basically their profit taking is really what I mean by that. Their profit taking comes in at 5:30. It was confirmed at 5:30, came up, and again at 10 o'clock. 10 o'clock is this green candle. It just rolled a little bit early, so there was a short in there. It didn't make it up to the 23.6. So again, fib traders, you could have said, you know, basically this is where you can confirm it with a 23.6. But if you're waiting for the 23.6, it's a pure fib trader. You didn't get entry. Had you been trading this with supply and demand, you got your entry and you're already out. So now it's in a level down here. Would I be willing to take this one long right now? Do I think massive amounts of dollar weakness are going to roll in? No, I don't think so. I mean, the United States has a much bigger GDP. We can sustain a lot more than a smaller country can. Like I said, the UK has done 4.25 raises in a row. We've done a 25 and a 50. And again, it's not really slowing much down. We know more is coming. The president of the United States is sitting there saying, it's a problem. It's my number one priority of all the issues we have. Like, we literally have a Supreme Court, you know, documents being leaked and changing the entire trajectory of women's health, and his number one priority is inflation. So, yeah, it's a big deal. It's that big of a deal. I think more dollar strength is coming. I would look at this and kind of treat this the same way as gold, a commodity, and the same way as the indices. Whenever we get any pullbacks, we look for shorting opportunities. Right now, we know we're in a larger time frame level. What I would say is, look, we got a basing level right here. We're hitting again. There's definitely some buyers in there. If there wasn't, price wouldn't have stopped and have gone higher. The same thing we just talked about. When we get a break in here, again, we're looking for a pullback. This could be breaking of 69. It looks like it's like 69. Is it 69 flat? I bet you it's 69 flat. 8, 7. Oh, no, 69 flat's the lower one. So, yeah, it's a little high. I wouldn't be surprised if we come in here again next time we come through, if we do like a little bit of a base in here, right? As it's eating up the rest of those buyers, and then we have a drop down just to the 69 level. Again, that would be a psychological level here at the bottom of the zone. And then we pull back up right to this level here. And then we have our collapse down to the next level down below. And again, I would say overall for this one, I'd look at targets down at 68, 36, right? Particularly with CPI and PPI in the next couple of days. Ways you can play this one, again, there are weekly contracts, there are weekly binaries, there are also knockouts. Now, again, typically knockouts don't work as well when price is just trending, because it keeps blowing them up, blowing up, blowing it up. You never get a pullback. But if we get any type of pullback, there could be some awesome opportunity. Okay. Now, ASEAN looks very familiar, very similar. At this point, we're looking for this again. Yesterday, we're like, all right, if we get a pullback, that one makes sense now. If we drive all the way down here, you can say, actually, I guess the first drive would have been here. Yeah, I wouldn't have called that 26. There, I mean, it kind of went through and grabbed that level. Let's see. Yeah, I mean, we had a short. We were talking about a break of 91, right? And it did. This was not an entry. This, as much as I'd love to say that, hey, listen, you should have gotten short here. Did not give us the entry we wanted, and then it drove all the way down past the profit target, and then came up and then grabbed the 91.10, and then it went right back down to the profit target. So in an ideal world, it's nice to look in hindsight in 2020, be like, look, I told you the strategy worked. Technically, this did not qualify from the rules. It did still work out in the fact that it came back up to the previously violated zone. It acted as the short area like we predict, but we do it with the Harry Potters, and it still went right back down again. I think right now you look at this one just like the Aussie dollar. You say, hey, listen, the lower end of the zone right here, we already have it marked off. We already know something was in there, right? We had it marked, right? We knew it was from here, right? Now we have a more near-term level of basing. This could be where we look for a break of this down here at 88.77. We said at break of 88.77, again, a drop, a base, and a pull back up again. Not like this, but faster, right? Could be another opportunity to take this one short. And the risk level in this one, I don't think is that big. Um, it's 23, 23. So it's a little bit bigger than I like, but it is the Aussie and it tends to move, right? Tends to move. And again, you may say, well, I don't know how to trade Aussie, right? I don't trade currencies. How do you do this? It's kind of linked with gold. As gold deteriorates, and again, gold is down 0.42. It's funny. Gold is down 0.43. This is down 0.38. You can see that they're almost identical, and they don't always follow that closely. But anytime there's strong dollar, gold will get weaker. Also brings this currency down. Now, euro pound. So euro pound, interestingly enough, okay, we had talked about having something at the 50% level, and you can see it hit the 50% and then dropped and then came back up again and then got stuck. It was like glue. And it kind of bounced between the 50, the 61.8. It's like, what do we do? What do we do? What do we do? Went back up 78. What do we do? What do we do? And again, you had lower lows, lower highs, and now it's kind of like doing the other thing. And it's still stuck around the 50 percentile mark. Right now, and again, the euro pound is down 0.12. It's really down, not a whole lot. We've gotten messages. I mean, again, look over here. They're talking about where do we talk about it? Talking about the ECB is ready to go. How long is the rate window going to last? I mean, everybody's talking about how the EU, that's it. They're going to start raising. They're raising interest rates. Well, why the heck is this not moving? You may wonder. And again, a lot of it is because they have to raise it. They don't have a choice. They have to raise it. Inflation is getting absolutely out of hand. They have to control interest. But the problem is they're probably going to put themselves into a recession. We already know that basically Germany's headed there, if not officially already there. We know that, although Germany wants to be completely energy independent of Russia, unfortunately, they said if they were to do that, it was going to lower their GDP by 5% and also officially put them into a recession. That they were borderline teetering right now using Russian oil. And again, I'll show you the OPEC statement in a little bit, but yeah, it's not getting strength. Anywhere else, it should be like, oh, this is great. It can stomach it. The reality is most people don't feel that the EU is going to be able to stomach any rising interest rates, but they have to because prices are just getting out of control for people. And again, you saw Nagel say that if you don't handle inflation, the long-term implications of it are worse than the current bite. Okay. Now euro yen looks very, very similar. So we were talking about this one yesterday morning, and for my group, I was mentioning that, hey, listen, we had an area, we had an alert kind of set there. I do alerts for my students. 138.29 was the level that I was looking forward to hit. We had a zone up there, and you may say, why do you have a blue? What is this blue icon up here? The blue icon happens to be a Nadex knockout. Okay. We were talking about, hey, listen, we are in close proximity to risk. As you can see, the risk on it was tiny. My full risk level went all the way up to 138.57. So again, it was a bit higher. As that got close to this level, we were within about 10, 15 pips, right? $10, $15 of that level. You can see how fast that one deteriorated and how this has been rolling away. Now, remember, if you guys are unfamiliar with knockouts, always go to demo and mess around over there first where it's not real money. Just don't go blindly taking knockouts if you don't understand what the product is and the pros and cons of it. This was a great example where we were really looking for this weakness to come in. And again, I'm going to say this right now. This does not always happen. The knockouts do not get in this close proximity. I would say I don't know, I'd say it's a crapshoot, but some weeks they just line up so perfectly, right? This was one of those ones that just happened to work out perfectly where it's like, oh God, it's right there. I already had an alert there. I was looking for the price to roll back down again, and it met, all the fundamentals kind of went in. And it really hasn't moved. I mean, yeah, I guess it's moved 100 pips down, but you see what it's doing today. It's doing nothing. It's doing nothing today. So right now we're in between those two levels. I think because we had the nice turn here, you still got to be focusing and looking at 138.31 and saying, all right, it had a good move. It accelerated. It was fast. definitely an area where there could be some sellers. And actually, there's definitely sellers. I don't know how many, but if there was no sellers there, the price would have went higher. So I mean, I can say with absolute certainty, yeah, there's sellers there. Because if there wasn't, nobody would have been here unless the absolute last guy sold it, which I doubt. Right? This is quite a strong movement amount. I'd say on the other side of it, 136.25. Once there's a lot of chop through here, a lot of go through, right? A lot of stuff in here, and not a lot of great candles. You can see it really spent a lot of time basing in this the same level down here at 136.85. But we do have another alert set, 136.25 down below. If you guys are looking for something there, I would say when it breaks that, we have a racetrack scenario right here where again it is, full blown. Let's go. Hit that accelerator, and again the ability to come down all the way to 135.56. So couple things for the euro yen. Euro dollar. We've had the levels drawn. Yesterday I talked about how, listen, this literally rallied straight up in the morning, and then at 12:30 in the afternoon it hit. It hit the aggressive entry. Depending on your individual risk tolerance, sometimes you're going to be, take more aggressive trades. Sometimes you're going to like the conservatives. I tend to draw more of the conservatives, but I will show you where the aggressives are. Well, the aggressive is the yellow. It was the same level we hit before, and guess what? That's the one that turned it and rolled it down. It's now down about 50 pips, but it is getting a little bit more choppy. For me, this 105.98 or 106 is kind of the target up top. 105 is going to be a big number, and I'm looking for price to kind of run back down. It has bounced off 105 a few times. As soon as price gets to 105, everybody and the brothers talking about parity. I think parity. I think this is the year we hit parity. I don't think the EU will raise as fast or as much as the United States. Again, we're a bit more insulated over here on this side of the water. So again, we don't have the same type conditions, and our economy, again, our GDP is so much higher. We can stand much more of the kind of brunt of things. I think this is the year. Are you going to be able to trade it next week? No, I don't think so. But is there going to be some opportunities coming? Yeah, I think there is. So again, looking for this to drop down. Right now, it's in the 50% mark. Not really a lot there, but I'm looking for those two levels, top and bottom. Pound yen, as you can see, was like getting creamed, right? It was getting creamed, but now it's catching up to what it was yesterday. So in 24 hours, let's see. In 24 hours, it's down 49 pips, right? But in that time frame, it went up 140 and then right back down 140. For me, 160 is a big number. I think it is a large psychological number, no matter who you talk to. Where we are right now, we're kind of floating above it at 160.40. Is that a bad number? No, I think it's a perfectly fine number. The UK market is now closed. There's really nothing driving this one besides the yen right now, which again, we're basically at lunch. So even as a proxy, it's not necessarily the best thing to trade. But, and I say but, I think there's some opportunity in here. Hearing that some of the data out of the UK that their consumer confidence is dropping, their inflation is not handled yet. I guess it really depends on this is a retail sales monitor. Is it the official number? No. Could it go back up? Sure. I don't think the story's over yet. I don't think the whole story is written yet. Um, I mentioned yesterday too for my group. I've been a UK or a pound bull for so long right now. With what we're seeing right now, that consumer confidence number is something I'm like, maybe we need to put the bull side away for a little while and get more on the bear side of things. Again, against the yen, it's a little bit different. But right now, again, seeing that consumer confidence and a comment as pointed as it's crushing people with the cost of living right now. That's not just like it's annoying, right? Crushing is a big deal, right? So I don't know. I feel like we're going to probably hear more about this. I feel like this one is going to be short, and I would say whenever we get decent pullback opportunities, we look to get short the pound yen for this week. Pound dollar also kind of again just kind of bouncing between two levels. I don't necessarily love the top side of it, but it's a proven level at this point of 132.85. Yesterday morning we were sitting down here and I mentioned that, hey, listen, actually, yesterday we were right here. I was like, all right, if we can get this, if this can come back down again, there was, and again, if price comes back down, it will reprint again. 122.45. There was also a knockout to the top side. It just never gave it. It never came down and gave us an entry. So, but it was one of those ones. It's like, hey, you know what? Mark this off. Mark this off. There's something there, right? So, it's where we are. 123.85, 122.53 in the bottom. Dollar CAD continuing to grind, and again, oil being down $3. Oil is under $100 right now. It absolutely should be doing this. There was a position right there of 129.68. Again, it's blue as a Nadex contract. You can see that one continue to push through. Came all the way back, grabbed that same level. Again, it's kind of like the Harry Potter what we're talking about, right? Pushed through base, came back, grabbed the old level that was there, and boom, off to the races. 130.40. For me, Canada has made some comments. Canada will rise. Canada has an issue with inflation, but at the same time, again, oil really needs to be going up for Canada to really be getting a massive amount of strength right now. Them just raising their interest rates tends not to be enough because again, their GDP is not as big as the dollar. It's not, they're not raising it to some astronomical amount where it's like, holy crap, put it in the Canadian dollar. So I would say right now, I am still on the side of being bullish on this one. It's great when Melissa and I send money back to our parents, but it stinks when we take money from Canada, bring it down here because obviously the exchange rate is not the most fun. Um, but I would look for this one to continue higher at this point. I'd start targeting major numbers. What I mean by major numbers is, 131 is going to be a big deal. And then again, hopefully it's not here too soon, but 132 is also another big deal. And again, if they figure out how to increase global supply to lower the price of energy, that only hurts oil. That also hurts Canada. And we know we're raising U.S. interest rates. So, yeah, I think dollar CAD is a buy for me. Dollar Swiss. Keep talking about it. Every time it pulls back, go long. Again, we got a pullback, went long, right? Pulled back, went long again. Pulled back, kind of went long, and now it's trying to get up there. Trying to get the parity in this one, right? I talked about parity with the euro dollar. Again, parity, we're looking for parity in dollar Swiss as well. Dollar Swiss has the same contagions right now. It does not have its neutrality status anymore. It decided to actually put sanctions on Russia. So it's kind of one of those things. It was a geopolitical based pair that you would see strength going to the Swiss because everybody knew that they would stay neutral. Unfortunately, they're not neutral in this situation. So they're going to have all the same problems that Europe does. Natural gas is going to become like a problem when they're starting to fill their tanks. They don't have the storage capacity to hold large amounts. Um, I think I think they have enough port access or close proximity to port access. They should be able to get it delivered, but it's going to be the same thing. There's just going to be such a rush and such a demand for filling winter natural gas. I think they will have some issues and some weakness. So for me, whenever there's a pullback, I think dollar Swiss is a continued buy. Uh, dollar yen. Magically, it was like, oh god, 130 is so bad. And we hit 130, and they're like, 135, 135. We made it to like 130, 150. Now we've pulled back again, and we're still sitting right around the 50% in 24 hours. This one really hasn't moved much. We're talking about minus 5 pips, and you can see it's all green, so it's literally just trying to kind of bring it back to what even was. For me, I had a buying area, and again, that would have been a 61.8 pullback right down here at 129.68. I mean, it's kind of been tested. We haven't been back there yet. We've chewed up to 50, so there's nothing more there. So look for it to kind of come down. But I really on both sides bracketing this one is 129.68 and 131.19. Looking at the cryptos, they were getting crushed earlier, but now they're kind of flipping back and forth again. Again, up 3%, Ethereum up 5%, Dogecoin up. They were getting slaughtered yesterday, and again, this was that reversal day, right? They were getting creamed, and then it was like, oh god, we got a day of rallying, yay! And then they're kind of coming back down again, right? They're having their own issues right now with some liquidity differences between brokers, and again, that's why this is not a legitimate kind of investment vehicle yet, because you can have something like this where I think it was with Terra, and they're like trying to use Bitcoin to hedge it. And it's like, oh god, now you're making this really, really complicated for people. Um, yeah, not quite yet. This is why they're asking for regulation. I think that will make a big difference. Anyway, let's go over the commodities. So we talked about 104.19 this morning. I was like, oh, we're so close. If we get up to 104.19, for me, it's it'd be an area where we could see a reversal or sell. Unfortunately, it made it up to 103.70. I missed it by a little bit, and it decided that as soon as the U.S. market opened, bam, the sell came in. It blew through kind of this area here. We are hearing many comments today. Again, Biden just we saw it here that where did he say that there was his top priority, and basically saying that it's oil, it's a problem. We got to you got to increase global supply, and it's not just like a snap of a finger, right? It's not a snap of a finger. The article that I wanted to pull, where it is right here, the oil minister for the the UAE. The oil market is balanced. There's no need to pump more. So again, Biden hasn't had the best relationship with really anybody in OPEC. He had the issues with Saudi Arabia as well. Kramer had somebody on. I think it was Pioneer Energy, and I could be wrong completely, but I thought it was Pioneer. They're making tons of money, and they even mentioned that Biden needs to make peace with OPEC and the Middle East. He should have people over there now doing it. And news like this, I mean, OPEC Plus basically is what's dictating the price right now. They said, we're not getting involved. Politics doesn't matter to us. We're looking at the amounts of global supply. And even said it. Where is it? Extreme volatility is not because of supply and demand. It's because some don't want to buy certain crudes. And it takes time for traders to move on from one market to another. So, you know, basically the idea of trying to boycott certain crude is going to be risky regardless of the motives behind it. They've already said they're not getting involved in politics. You can say, hey, listen, there's crude on the market for this price. If you don't want it, that's on you. But again, it's going to jack the prices for the people that don't want it, right? It's kind of like a premium item at that point. Um, hasn't kicked in yet. It's nice talking about more supply. Again, why we're talking about increasing supply versus removing the dependence on fossil fuels, I don't know. I can't answer that question. But again, I think oil is able to find a bottom once there's actually a major headline for it. Don't have it yet, but I would watch that 104.19. As far as big levels down below, you can see that we did have a Harry Potter break coming through. We were talking about a break of 99.76 coming down to 98.01. Again, we broke. We kind of didn't get the pullback we'd like. It's still time, I think. If we continue this across, we'll see if we can get it. But we don't really actually have any buying coming in until 97.26. So we got some room to run on this one. I mean, I would be totally fine with this one. If this wants to drop $2 more, hey, it's going to be no skin off my back. I'm good with that one. I joked last week I filled up the tank and it was like $71. And I have friends that they have to put their credit card in twice because I guess there's like a $75 cap on the pump or something like that, or $100 on the pump. They have trucks and they had to fill it up twice. They were not happy. But yeah, 97.26. I would love that for a downside target. 104.10 up top. Natural gas. Man, we were so excited. 9 o'clock this morning, we're like, look at this. It's getting blown up. We're at 650. This is awesome. Lovely. And then all of a sudden, like the U.S. trader come online and shot it from $6.50 all the way back up to $7.43. And now we're basing. I'm hoping, again, it cut right through the 702 number we were looking at. So, again, the 23 sixes are gone. I'm kind of looking at this point saying, hey, listen, maybe this is the new base. And again, it's not a new base. You can see there's a base sitting right here. There is no fib number that is associated with, but it did hit it. It did turn. I'm kind of looking to see if we get a little bit more of a confirmation on this one. If we start to pull down, this is a parabolic move. It should be retracing all the way back down, probably really into this level right here. I probably put a little bit higher, at least down here, which is $6.70. So it's got some room to run, is what I'm saying. Again, this is a parabolic move. If this was the euro dollar, I'd be looking to get short this thing. Right now, if this was euro dollar. So, but it's not. So it is a little different. And again, we're one headline away from another spike. Gold. Again, I'm tired of saying it. Again, we had the Harry Potter trade. We're looking for a break in the pullback. Every time gold pulls up, and again, it was green earlier today, right here. It pulled up, and it was, from where it closed yesterday, it was green. Every time it gets green, look for another way to sell it, and bam, all the way back down again, down to 1843. So, yeah, I mean, we could mark off kind of some small levels here, but yeah, again, rising interest rate environment, we're crushing inflation. It's our number one priority. None of those things are good for gold. So, again, if you understand the commodities market, yeah, it's not the best place for gold. And silver, look at this. If you guys were here last week, I was calling for $22 in silver. I missed it by a little bit last week. The week ended up here at 22.25, but Sunday night I was not failed. It broke through 22, and I drew the next one on there of like, hey, listen, 21.50 was my obviously my first target. Again, 21.50 is now officially out, and then we know 21 is there, but we do have some buying kind of situated around there at 21.11. But yeah, all those people that were just talking, we mentioned even a Harry Potter trade, and we're kind of got that right now. All these people talking about $60, $60 silver, $100 silver. Yeah, it didn't quite make it, guys. And now we're pushing back down. And again, I think with CPI tomorrow and then PPI, if God forbid those miss to the upside at all, woo, 21 could be on the radar for tomorrow. So I'm looking forward to that one. That's it. Like I said, the cryptos are doing their thing. They're back up again. Commodities for the most part are all down, minus natural gas, which obviously winter natural gas is going to be an issue. That VIX looks like it's holding firm. It's starting to kick back a little bit, which again, it should be. Lunchtime, I'm delayed a little bit. We'll see what it does now. And then again, the indices for the most part, kind of flat, right? This one, we're waiting for a break. We haven't gotten it yet. And again, it could be getting ready for it in a bit. NQ also, again, we're looking for the break, not there. YM, totally fine that it is now reversed and is trying to go up again. The old violated zone we don't actually need. We knew it's close to a level anyway, so we're fine with that. And then again, Russell on that one. Look, Russell is pulling up, and again, they're all doing the same thing, pulling back up into levels. We have a continued downward push this afternoon. And again, with the president, maybe he said something else, but with the president saying that inflation and crushing it is the number one thing, all of Wall Street is lining up behind the U.S. dollar's historic run. So, yeah, all of it is lining up to more down in the markets. So, yep. So with that said, that is it for today. For those of you that are attending for the first time, again, welcome. Make sure you guys mark your calendars off May 17th, next Tuesday at 12 p.m. Eastern Standard Time. We'll be back on again. If you guys are around in the mornings, don't hesitate to jump on YouTube. Again, make sure you go to Nadex profile, click follow, click like. Again, click the notification bell icon. You'll hopefully catch some of these things that we're talking about what's hot in the morning. So if you have any questions, email me, support@keeptradingsimple.com. With that said, I am out of here. Have a good trading this week, and I'll catch you guys next week. Take care.